Welcome to this edition of Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. Of course, Cattle Call is brought to you by the folks at Wolf Auto. They are small, town strong. Wow, what a week as we look at this trade. I'm excited to look at a report and do some breakdown because as it was explained to me, we've got some good numbers, and that means we've got some spectacular. Is it okay if I use that word, Brad? Spectacular demand. We're going to look at that. We're also going to talk about where this cash is going and how high can it go. I think there might be a little bit of nervousness, kind of like cats with long tails in a rocking chair factory. We're going to break it all down today with Brad Kooima with Kooima Varlick out of Sioux Center, Iowa. So let's talk about this fed slaughter numbers because that's where I want to start because you're talking steers and heifers. You're not talking any of the other slaughter possibilities.
Sounds good to me, Susan. Thanks for having me on. I think it's sometimes this program, I try to think of something that your listeners maybe aren't going to hear on another program or on the radio, right? Or read in some magazine. So I don't know, take it, bear with me, humor me, I guess, right? And most of the people that listen regularly know that I'm a bit of a numbers nerd. I still believe that the fundamentals have a place in our market analysis. And so just for fun, last week I got to thinking, I thought, I wonder, now that we got one more week of data to come, that'll be there. I'll have that tomorrow, but year-on-year data, and I look at that carefully at weights. Usually every Thursday is what I do, deal with the weights. But there's also a whole lot of other regular data. It talks about the number of calves you slaughtered, number of cows you slaughtered, heifer steers, a lot of data. And I got to thinking, I wonder just how much less steer slaughter, fed steer slaughter. I wonder how much less that was compared to a year ago. And you know what? It was more than a year ago. 0.2% more steer slaughter. Heifer slaughter right now at 1.3% less. So the fed slaughter, when I combine the steer and heifer slaughter, year-on-year difference is 0.5% less. 0.5%. Honestly, if you'd bet a steak dinner, notice nobody bets a chicken dinner, bet a steak dinner on that, I'd have probably guessed, I'm going to guess 3% less. We made record prices, lest one forget, and did it with only 0.5% less supply. I just think that's amazing, Susan.
So what does that mean going into the next year, knowing that we have tight supplies that we all know are sitting there at this moment?
I think two things, and I want to preface that. Be careful, guys. Yeah, I'm bullish. I think there's the thing set up like it's never been said before, but it's a non-cattle news event, right? The black swan. There's always risk out there. Okay, so I've given you my disclaimer, but it means two things. One, why did we rally if it's not supply? Then it's demand. Okay, and like you hinted at, demand isn't good. Demand is really good, spectacular. I like your word, and that's the way it's been. Now, where does that end? Where does that stop? If I knew, we wouldn't be wasting our time on this program. I'll tell you what. I mean, you only can do with what the information you have at hand. I think I've said this with you before. Generally speaking, demand stays good up until the Super Bowl, and then it slacks off. Okay, and you know what? It's our turn to make some money. The packer made $1,200 a head during COVID. He's going to lose some money here. That's what happens when supply gets tight. The second answer to that question that you asked me then is what happens then as we get into tighter and tighter numbers next year. Really, really looking forward to the cattle inventory report the last day of the month. But it's, and I've been contending all along that the supply in the first quarter is less than it was in the fourth quarter of last year. There's people that argue with me. We'll see. It doesn't feel like it. Look at the way the market's acting here on the cash market. And you still have this discount structure in the futures. So you still have a long speculator and even a natural long. If you were a packer, wouldn't it seem like it would make more sense to be long fed cattle at 198 than paying 205 for cash cattle by the time you're going to get them? It's going to be February. So yeah, doing some look at what can be expected here of this contract. So yeah, I'm optimistic. There's a limit to how far we're going to go. Demand will slow us down, or some other weird event will happen, but pretty fun right now.
But am I understanding this right? Some of these cattle that are being purchased even this week, yesterday, today, are getting wheels under them pretty darn fast.
Talked to a guy today at lunch hour today. Last Wednesday, sold cattle, and they went the same afternoon. I personally had cattle that my brother sold for me on Friday that went Monday, and the rest of them went today. You absolutely, so I think the packer overplayed his hand a little bit, perhaps hoping that maybe there was more supply as we got into the new year. Maybe he could use up some formula or captive cattle here, but I think, like I said, I think he overplayed his hand. All of a sudden, he find out, well, actually, not so much, and particularly in the north. And now they're forced to chase. The other thing about that, I think that's probably further incentivizing the packer is, and this is somewhat subjective, but this is what you do when you're an analyst, right? How is the demand? How is the clearance through the holidays? All that blah blah blah, right? Well, I'm told the vibe I get is that the clearance over the holiday period was outstanding. So all of a sudden you have the pipeline empty again, and the need to restock, reload all this, as it moves through the various outlets, whether it's retail or whether it's H&R, and so that's the packer's not going to say, I'm not going to kill and let my competitor kill and feed that other person. He's in a difficult situation. Not that I feel a bit sorry for him, but so we'll see. The talk of kill cuts, you'll hear that spring up again at some point, I'm sure. That's what you do when you have less cattle.
So I made a comment at the beginning about being a cat with a long tail in a rocking chair factory. Is that how some of these cattle producers are feeling as they watch these markets go up? They watch the cash go up, feeling that other shoe, or as you like to say, up the escalator, down the elevator, is going to happen at any moment.
I have that post-it note, right? That and about 70 others stuck up on the deal, up on the stairs, down in the elevator. I try to be entertaining, but please understand, I have great empathy for, the being respectful of the risk when we're paying this much for replacement feeder cattle. I'm 67 years old. My first set of cattle I fed in 1974. Okay. Gone through a couple of these deals. I don't want to do a 2015 again. None of the producers do. The cow-calf guy doesn't want to do it. Our memory, I think, is very clear what happened there in 2015 and all the way into December of 2016, where we went through a round where I've never experienced such a sustained period of loser after loser after loser. So, to identify some of the things that went wrong, well, number one, as the commodity broker in me would say, one of the things that changed then is the pit closed in June of 15, right? And the market dynamics changed a lot, and it's taken us a while to adjust to it. I'm not sure we've totally adjusted to this algorithm, HFT, fund driven kind of a trade. But the other thing that really happened, we lost our leverage totally. We had a high break evens, feed got cheap. We had big losses. We fought and we fought and we overfed and we overfed and we overfed to a fairly well. It took us forever to get through that mess. Now, so to redirect to where we are today, Susan, I think the North has pulled ahead a month. Yes, the average weights are big, largely because of the South, partly because of good weather, partly because the formula guys want the packer wants them to get bigger. That's how we're going to maintain beef production, right? More weights, less cattle. But to say that we're fighting this thing, we're making money. I think it's just the opposite. I think that the high-priced yearlings that we bought, we were afraid they were going to lose money the day we bought them, and now they're not. And the performance has been outstanding. In open winter, these cattle have performed way better than we thought. The break-even's a little less than we thought. Can't wait to take that red ink off the table and say, I'm going to make a little on them. So, we're quite a ways from being that in behind on that leverage thing. But guys, my approach has been, decide how much you're going to budget for some cheap put options and do it. Make somebody that keeps you accountable to it. Even if it only gives you 60 days production, let those go through and then do another 60 days. If you lose $1.00 on your break even because you had some protection on, I think that's the best thing that could happen to us. So I'm not a big, if you want to hedge them, go for it. I think the market's got upside potential. That's why I lean toward that put type strategy, but to each his own. I just, be careful, but the market is in a very, very awesome spot here, in my opinion.
As we get ready to wrap this up, are you bearish April cattle?
No.
I had to ask.
Yeah. I've been known to give very long-winded answers. I thought sometime in the first quarter here, he said it before, I'll say it again. I thought if things fell right, we had a chance of testing 220 on the cash cattle market. There was cattle that basically about 207 here yesterday, based on what they were sold for in the meat. unless something comes along, as long as we continue to move cattle on a timely basis, I don't think we're quite done yet. We may have a double top in the charts now, but I think we're going to take that out.
All right. Sounds good. What is the best way for folks to get a hold of you, Brad?
This was a little aggressive today, wasn't it, Susan? I think. We'll see if they like it. KKV Trading, kkvtrading.com is our website, or 712-722-0023. You better put that disclaimer on there after this one, I think.
I was just going to say, because of what we talked about, most definitely, just a reminder that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. That's been this week's Cattle Call. Of course, Cattle Call is being brought to you by the folks at Wolf Auto. They are small town strong. And that's the Cattle Call on the Rural Radio Network.